right. Wednesday, 13/23, 55 seconds. The year 2025. Year 2025, 4th month, April, day 16. All right, today is another drawdown trade. Down to $825.12. Today's trades are right there. The trade three. They were all threes. There were 3 trades. First one, $60 loss. Second one, $12 loss. Third one, $6 loss. $6.60 for a total of $79.20, which was around the same as yesterday. Put $2 into the account today as a test to see if the money would go in. It says client funding down here at the bottom. So down $215.92 for the week. The month, $375.81. Now today's trade is the euro dollar. Give it arrow. No, that's not it. It's a bit hard to see. There it is. So here's today's trading day. In between these lines right here, there's a line, and then the line on the other side over there. And the brother's got a white bar now for the Asian session, so it's easier to read the 3 o'clock 0300 down here, 0900, 0 and 1500. That's military time. The green line is New York. The orange line is London. And the white line is Asian session. So yesterday during the Asian session, the trade, yesterday's losing trade, if the brother would just stayed in it, it came all the way back up because the brother got in the trade right in there. It went down, lost $40, and then started trading 30-cent lots and ended up losing 70. But it came up, it closed at 2 o'clock. There's the white line. Yesterday's Tuesday, today's Wednesday. Closed at 2 o'clock and immediately just went all the way up. Went up to here. That would have been break even. Then it went up to some in profit. And it started coming down. Then after the Jerome Powell, the 10:30 news, Jerome Powell, look at the news here. Here at the top it says 10:30 red USD or red square. Fed Chair Powell speaks. That's the chair to the Federal Reserve. So as soon as he started talking at 10:30, the market started moving again, and that was around That was around in here, right here. The market came down. Get a bigger screen. The market was right there. It came down, went up, came down. Actually, it might be right here. No, somewhere in there. And then finally it went up, 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 up. And now it's come down, and now it's on its way back up, supposedly. So if the brother wanted, he could put a trade on right now, and the market, seems how this is in line with the trend. The market would probably go all the way up. Only problem is close to 2 o'clock, which is the close line right here. Usually at 2 o'clock, the market spikes down, and then it comes back up. But it doesn't affect the money account, though. So wait till after 2 o'clock to place any trades, like about 2:30. So anyway, so here the brother was. So the market went up from yesterday during the Asian session. It went up, 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 up. And then here's London right here. Came down and it went up a little bit further. And then the brother did not place any trades last night. It was up till about 1:30. 1 o'clock, probably 1 o'clock, 1:30, around there. And the market came down. And then it just started coiling. This is called a coil. Some people call it a spring. Some people call it sometimes it's also known as, instead of using pronouns, be more general, sometimes it's known as a trading range. Price just goes up and down, up and down, up and down, up and down in a box. And this would be a box. It would be a red line. That would be like a box right there. And bring it up a little bit further. Around in there. That would be a trading box. We'll just close that for now. Leave it on the screen. And change the colors on that so that it stands out more. That would be white. Tap on white. There it is. It's white at the bottom. Done. There it is. There's a trading range box. So anyway, the brother saw that there was a peak high. Here's the peak high right here. Then it came down. It's like an engulfment. Then on the 15-minute chart, here's the green line. And on the 15-minute chart, it had a pin hammer to the downside. Now they locked in the high right here at London, and then the market proceeded to coil underneath the bull high, or the peak high. It's called a bull high. This white bar would be called the bull candle. The last bullish bar, so it's called a bull high. Bull high. And it started coming down, and then coiling all through the morning, coiling. Now here's the green line. New York opens up. So there was news today. There was news right here at 5:30. There it is at the top, and that was core retail sales and retail sales M/M. They came in positive. So actually, brother can just leave that right there. There they are right there, and then just hit the home button and leave that screen right there. So they came in positive. And this is 5 o'clock. This is a 15-minute chart, so at 5:30 news struck. This is 5 5. This bar is 5.15. This bar is 5.30. At 5.30, the market went down a little bit, went up and down right here in 15 minutes in a range. And then it went down, and then it slowly started going up. Now, that was good news for the dollar. So the market should have, on good news, market normally would have started heading down. The reason being is because the US dollar up here in the corner, USD, is the second currency. The first one is EUR, which is the euro, and the second one USD. USD is for, the second one is for down, going down, this toward the dollar. Going up is for the euro. So when price moved up here, the euro was gaining strength. And over to the side here, there's the price, 1.13910. It goes up in increments, 1.14000, 1.14090, somewhere in there. Zero might be an 8. Remove the sunglasses, it should be an 8. Brother's wearing sunglasses here, so remove those, can see the screen. All right, now back to the trade. So here's news. So after news, price kind of went up, down, up, and then it went up to the top of the box. And the brother saw this and he said, this is a box here. Actually, the more or less the top of the box would have been a little bit down further, like right in there. Right in there. So usually a box that has 3 hits, 1 comes down, 2 comes down, 3, and then comes down. And after the 3rd hit, the brother saw the bull candle and just considered this the high bull candle, or this is a pen hammer, not a bull. A pen hammer to the downside with a black little hammer, or it looks like a hammer, like Thor's hammer, put in the hand. Here's the hammer at the end, and here's the handle. The wick is the handle. The candle body is the hammer, which is an indication that price is more than likely headed down. Headed down. So within 15 minutes, the price rose, and then it came all the way down and closed down. So after the close of that candle and the opening of the new candle here, brother got in the trade. He put a 3 on. It started going into profit, and then it came back. And then it went a little bit more, and it came back, and then it went up. And then at this point, the brother got out of the trade right here for a $40 loss. And then price came back down. It looked like it was going to go, but it didn't. Somewhere in here, the brother got in another trade. Price started coming down again. Somewhere like up in here probably. Brother got back into the trade, and then immediately went back against, so brother got out of the trade for a $12 loss. And then somewhere in here started coming down again, so the brother got in the trade again to see if it would go down, and immediately went back against. So the brother got out for a $6 loss. And the brother just sat here and watched it all fucking morning, going back and forth between also watching the pound. So here's the pound. Right in here is around 5.30. The pound broke the low, it came down, came back up, and it was making lower lows all day. And then going back to the euro, the euro never made any lower lows. It just kind of like started looking like it was going down, and it just kind of hung out right in here. It didn't really move. But the reason why the brother was feeling good that the trade is going to go down is because he just switched over here real quick to the pound and see the pound going. This is the pound US dollar up in the corner. It says GPB, Great British Pound USD, which is a London, England traded currency, which is similar to the euro. So they both go the same direction pretty much, although they fluctuate. So the brother would sit here, he'd watch the pound, he'd watch the Aussie dollar. And the Aussie dollar was kind of doing its thing over here. No, that's not a fucking arrow. So here it'd be around 5:30. The Aussie dollar just kind of like, just kind of like traded right in there. And of course it went up later, but then came down again. So the brother was watching the Aussie dollar, and then the euro Aussie. So here's around 5:30, around in here. Started coming down, and then it went back up all throughout the day. Here's close to 2 o'clock right here. So it was kind of, it goes the opposite direction. It was moving the opposite direction, or the same direction as the euro US dollar. Whenever this would start to go down, the US dollar would go down. But this would move first. The euro would move first. The Aussie euro, or the euro Aussie would move first. And since how Aussie is in the second position up here, going down is the Aussie. Is the Aussie moving? The Aussie's moving, going down. And then on the euro dollar, that would be going down for the euro dollar. Going down this way would be the US dollar going down, because once again, look up in the corner, the USD is to the right position at the indicator, the currency indicator at the top of the left screen, with the M15 following the currency indicator abbreviations. That's minute 15 minute chart. So when the Aussie was going down, the euro would go down. And when the euro Aussie was going up, the euro would go up. It would follow it, because the euro Aussie would move first, and then within a minute or so, then the euro would follow. So it's a good way to anticipate whether there's going to be any movement in a particular direction. So the brother would look at that, and then he'd look at this is the Japanese yen, US dollar. They're around 5:30, which is around here. Up in the corner up here is JPY, US dollar, up there. And since this is the MT5 platform, it spells it out underneath the abbreviated currency indicator. It says it's a bit cut off toward the left. but it says US dollar versus the yen, which is Japan. So whenever the euro dollar goes down, the yen, the US dollar, since how it's in the first position, it gains strength going up. Whereas the euro US dollar, since how the US dollar is in the right side position, and the indicator at the top left hand corner with the screen, the US dollar's second position, or the right position, goes down. So once again, every time the US dollar yen, the US dollar is in the left position, which is the first position, which is going up. The dollar always moves in the same direction. That's the point to revealing that particular information. So same thing with, and here's the pound dollar. The dollar pairs, all the currencies put together known as pairs. One pair would be the pound US dollar. It's a currency pair. Then trading over here, there's 6 different pairs that the brother trades. Over here at the top, Aussie dollar, going down to the screen, Euro Aussie, Euro yen, Euro dollar, pound yen, pound dollar, and the dollar yen. So the brother is monitoring each one as they move. This right here is the pound sterling yen, which is another name for the Great British Pound. It's also known as the sterling or pound sterling. So around 5:30, 5 o'clock, market opens, was up around here, started coming down, and then consistently going down. So that was a consistent mover, although it did not have no first red day, which would be the previous day close. Here's the close for yesterday, which is Tuesday. And then the previous day to Tuesday is a Monday, and here's the close down here. So it's still continuing to go up. So there was no red day. Today shall be a red day, though. The red day is that the market closes. The market opened at 2 o'clock over here, just continued from Monday or Tuesday, and this is Wednesday. And it moved down, and now it's ready to close at 2 o'clock, 10 minutes. And that's going to be now first red day, which is also known as a trigger day. A trigger day is an indication to watch the markets, because now the market can pump back up and then continue going down. The first red day is also known as the first down day, and that means that traders have entered the market at the top up here, or somewhere in here, mainly at the top. Notice there's a 1, 2, 3 also. The brother saw that later on in the morning, but if he would have saw this at night, he would have given it more attention, but didn't. So the market came down. Now it's a down day, but traders entered the market here, and they entered the market going down, which is why the market moves down, because traders enter the market, because they say, there's a 1, 2, 3 top, good, we're putting our trades in, it can't go any higher, we're going down. And sure enough, the more traders that get in, the more the market goes down. So Anyway, so the brother was just, looking over. Here's the euro yen. The euro yen had a first red day yesterday. It also had an inside. Nope, that's not an inside day because it broke. It broke. Yes, the previous day's high. Here's the white dotted line. Here's yesterday's previous high, and then on the other side of the day, which is Monday, it broke the high. So that's not an inside day. It looks like it, but there's this little wick at the top that cancels that out. But yesterday, which is Tuesday, was the first red day. So today the market pumped up, and then it gave a trade. This was a trade right here. If the brother would have give this attention, he could have traded this and got some money, because it did go down. But he didn't. He traded something else, the euro dollar. This came down, broke the previous low over to the left here, came down lower, and it went up, and then that was the signal to get in. As soon as this bar engulfed, then get in right there at the next candle, get in, boom, kept going down, and that would have been around 30 pips. Just look over here, get in the bar right here, then go over here to that 162.010, and it came all the way down to 162.489. So 01 to 48. That's how to read that, which is 50 pips. Simply put, or 60 pips. So that would have been a 60 pip move. So anyway, so getting back to the euro. So any mistakes that the brother can see that he did right here? Well, the instincts told him from trading, through experience. Brother's been trading for 5 years. Through experience, something said that this wasn't a real proper setup, because it really wasn't at numbers. Because looking over here at the top of the high bull, which is right here, top the high bull right there, and they move over to the price, that's not quite at it. That's around 1.390, and rather prefer these markets to be at a 0.25 or a 0.5 or a 0.75 in order for the high bull to start coming down in engulfment. And this really wasn't a clear one bar engulfment, although probably on a 30-minute time frame it was a longer bar. And then go to the hour. Nope, not even on the hour. So it really wasn't a good setup. But the brother was feeling anxious and all that shit, and figured that it was going to go anyway, because yesterday was a first red day right here, which is a close below the previous day's close, and the previous day's close is right here, 2:00 p.m. and here it closed down here at 2:00 p.m. This is supposedly the pump up, and this is supposedly gonna continue, supposedly going down for another day, but it didn't. Did it did the opposite. It went up more. You can see here at 2 o'clock now it's ready to close. It's getting ready to close at a higher close. So that nullifies this red day. Yesterday's red day nullifies it. So now I gotta start from scratch again. But in the long run, this is a bull market. The trend is up. All these white bars, all these bars are going up. So the trend is up. So who knows where it's going to go. So brother would just keep an eye on the market and put this right there. Hopefully when we go back to the day, to the 15-minute, it'll still be in there. Yeah, there it is. Alright, so that's that. But the brother didn't blow the account up. Lost it, another 6%. But at least there's still something in it, in the account. So, brother's feeling much more energized today. Get these things off. Erase these arrows from the trade screens. No arrow there. There's an arrow. Delete. And delete that one. Gotta press down and hold on it on the touch screen, and then up pops the delete button. So that's that. Like the brother was saying, brother's feeling more, brother's more cheerful with today's drawdown. It's not a loss. A loss indicates a quit. A drawdown indicates an opportunity to gain. It's an opportunity. Drawdown is an opportunity. Nothing is lost. It's like these fingers. If I was to go around town all day and say, "Oh, I got my fingers chopped off; they're missing," well, that doesn't give any enthusiasm to the fingers to say, "Ah, I can still grow back. The fingers can still grow back. These can be cured. Universal energy can cure these and grow them back." So it's just a drawdown. This ain't a loss. It ain't missing. The money in the accounts ain't missing. It ain't stolen. It's just a drawdown. It's somewhere else for now. Brother has an opportunity to get it back and increase it. So anyway, so that's today's trade. All right, later.